INTRO 0 o'clock to 0:45. Hello everyone, and welcome to KnowNet. If you've ever wondered how people make money trading gold, or you've heard traders talking about XAU/USD but didn't know where to start, then this video is for you. Today, you'll learn what gold trading is, why gold prices move, how to analyze the market, and the most common mistakes beginners make. By the end of this video, you'll have a solid understanding of how professional traders approach the gold market. Let's begin. Chapter 1. What is gold trading? 0:45 to 3 o'clock. Gold is one of the oldest and most valuable assets in the world. In financial markets, gold is traded under the symbol XAU/USD. XAU represents 1 troy ounce of gold. USD represents the United States dollar. When you buy XAU/USD, you're expecting gold to increase in value compared to the US dollar. When you sell XAU/USD, you're expecting gold prices to fall. Millions of traders, banks, hedge funds, and institutions trade gold every single day. Gold is popular because it's considered a safe haven asset during economic uncertainty. Chapter 2. Why gold prices move 3 o'clock to 7 o'clock. There are several factors that influence gold prices. The first is the US dollar. Generally, when the dollar becomes stronger, gold tends to fall. When the dollar weakens, gold often rises. Second, interest rates. When central banks increase interest rates, investors may move money into bonds, reducing demand for gold. Third, inflation. Gold is widely used as protection against inflation. Higher inflation often supports higher gold prices. Fourth, geopolitical events, wars, political uncertainty, financial crises, and global conflicts usually increase demand for gold. Finally, economic news. Reports like non-farm payrolls, CPI inflation, GDP, and Federal Reserve announcements can move gold dramatically within minutes. Chapter 3. Technical analysis. 7 o'clock to 11 o'clock. Professional traders never enter trades randomly. They analyze charts. Some of the most important tools include support and resistance. Trend lines, moving averages. RSI. MACD. Candlestick patterns. Always identify the market trend first. Is the market making higher highs and higher lows? If yes, it's an uptrend. If the market is making lower highs and lower lows, it's a downtrend. Trading with the trend usually offers better probability. Chapter 4. Risk management. 11 o'clock to 14 o'clock. Risk management is more important than finding perfect entries. Never risk money you cannot afford to lose. Professional traders usually risk only 1 or 2% of their account on a single trade. Always use a stop loss. Always plan your take profit before entering. Avoid emotional trading. One bad trade should never destroy your account. Remember, protecting your capital is your first priority. Chapter 5. Common beginner mistakes. 14 o'clock to 17 o'clock. Let's look at mistakes most beginners make. Number 1. Trading without a plan. Number 2. Using excessive leverage. Number 3. Ignoring economic news. Number 4. Moving stop loss because of emotions. Number 5. Overtrading. Professional traders wait patiently for high-quality setups. They don't trade every market movement. Chapter 6. Simple gold trading strategy. 17 o'clock to 19 o'clock. Here's a simple strategy. Step 1. Open the 4-hour chart. Step 2. Identify the overall trend. Step 3. Draw support and resistance zones. Step 4. Wait for price confirmation using candlestick patterns. Step 5. Enter with proper risk management. Always maintain at least a 1:2 to risk to reward ratio. Patience is one of the most valuable skills in trading. OUTRO 19 o'clock to 20 o'clock. Thank you for watching today's video. If you found this guide helpful, don't forget to like the video and subscribe to KnowNet. New videos about gold trading, Forex, cryptocurrency, computer networking, artificial intelligence, technology, and educational content are uploaded regularly. Leave your questions in the comments below. I'll see you in the next video. Until then, keep learning, keep improving. And trade responsibly. KnowNet. Learn, discover, grow.